Now let's start with the practice manual sums. AS-13 investment accounting for investment. Question number first, that is question number 46. Briefly explain the disclosure requirement for investment as per AS-13. Wait, I'll zoom it little bit more. Please study the disclosure from here only. Now we'll start question number 2, that is question number 47 of this accounting standard 13. Messrs Innovative Garment Manufacturing Company Limited invested in the shares of another company on 1st October 2014 at the cost of rupees 2,50,000. So it is purchased on 1st October 2015. Keep in the mind it is purchased on 1st October 2014. Sorry. It also earlier purchased golds of rupees 4 lakh and silver of rupees 2 lakh. On 1st March 2012, market value as on 31st March 2015 of the above investment are as follows. That means the above investment market value as on 1st March 2015, 31st March 2015 is given below. That is, shares have been declined to 2,25,000, declined by 25,000, and the value of gold have appreciated by 2 lakh. That means the value of the gold on the current date, that is 31st March 2015, is 6 lakhs and silver is 3,50,000. The silver has appreciated by 1,50,000. So how to show the investment in the books of accounts? Let's see. How above investment will be shown in the books of accounts of Messrs Innovative Garment Manufacturing Company Limited for the year ending 31st March 2015 as per the provisions of Accounting Standard 13, accounting for investment. So firstly for shares we have para 31 and para 32. We have to assume it because it is already purchased on 1st October 2014 and it has just been 6 months, after which the value of the shares have been declined. So firstly we have to think whether we have purchased the shares for long term purpose or for short term purpose. So we have to take an assumption. We have to write two alternatives. First alternative by taking it as a short term investment, and second as a long term investment alternative. Okay, so let's read. For shares only we'll read because shares is this too. As per AS-13, accounting for investment in shares, if the investment is purchased with an intention to hold for short term period, then it will be shown at realizable value, that is FMV, fair market value, of rupees 2,25,000 as on 31st March 2015. This was the first alternative. Now let's see the second alternative. If equity shares are acquired with an intention to hold for long term period, then it will be continued to be shown at cost, that is 2,50,000 in the balance sheet of the company. However, provision for diminishing shall be made to recognize a decline. That means simply we'll read our para 32 from the theory. Long term investment will be valued at historical cost unless there is a permanent decline in the value of asset. They have just twisted the sentence. If other than temporary simply means permanent decline permanent in the value of investment. Please don't write this, please write the para 32 because that is quite simpler and easier. You will get marks, don't worry. Now let's see for the remaining part. As per the standard, investment acquired for long term period shall be shown at cost. Gold, how we came to know this is a long term investment? Because it is purchased on 1st March 2012, so it is already given here. So any investment which is hold for a period more than 1 year, it is long term investment. Quite self-explanatory. I have explained you and you have understood well. So let's see. Gold and silver are generally purchased with an intention to hold it for a long term period until and unless given otherwise. Hence the investment in gold and silver purchased on 1st March 2012 shall continue to be shown at cost on 31st March 2015, that is 4 lakhs and 2 lakhs respectively, though the realizable value have been increased. Okay, quite easy. I told you para AS-13 is very simple. We have only 2 sums are remaining that are also on the similar line. We'll see only question number 48 because question number 49 is similar to question number 48. ABC Limited wants to reclassify, that means please underline and write convert its investment in accordance with AS-13. Decide and state on the amount of transfer based on the following information. That means at what amount the particular investment will be shown in the books of account. Okay, a portion of current investment purchased for rupees 20 lakh to be reclassified as long term investment, as the company has decided to retain them. The market value as on the date of balance sheet was rupees 25 lakh. So this is regarding para 24. Para 24 says conversion of investment, that is short term investment, to a long term investment. So how to value it? We have to value it at cost of fair market value, whichever is low. The market value is given 25 lakhs and the cost is 20 lakhs. So I'll show you once a para 24, cost or FMV, whichever is lower. Read it if you want. So simply we have to reclassify it at rupees 20 lakhs when the current investment will be converted into long term investment. The long term investment which will be holded will be valued at rupees 20 lakhs. So let's see how the practice manual has given the answer for this. As per AS-13, where investment are reclassified from current to long term, transfers are made at lower of cost and fair value at the date of transfer. Okay, so they have directly written it, but we'll write it in a proper manner. Okay, as per para 24, cost or market value of the investment on the date of transfer, whichever is lower, will be shown in the books of account when a short term investment is converted into long term investment. That means reclassified. You can write slash and write reclassified besides converted. Okay, so let's see how they have answered. In the first case, the market value of the investment is rupees 25 lakh, which is higher than its cost, that is rupees 20 lakhs. Therefore, the transfer to long term investment shall be carried at the cost, that is 20 lakhs only. So quite self-explanatory. Question number 48, part 2. Another portion of current investment purchased for rupees 15 lakhs to be reclassified as long term investment. The market value of this investment as on the date of balance sheet was rupees 6.5 lakh. That means this is fair market value and 15 lakhs is the cost. So whichever is lower is 6.5 lakh. So 6.5 lakhs will be recorded when it will be reclassified, and there is a difference, that is 8.5 lakh is a difference. That means there is a loss. Such loss has to be recorded in P&L account as per para 33. Everything we have written in theory. See how they have shown. In the second case, the market value of the investment is rupees 6.5 lakh, which is lower than its cost, that is rupees 15 lakhs. Therefore, the transfer to long term investment should be carried in the books at the market value, that is rupees 6.5 lakh. The loss of rupees 8.5 lakh should be charged to profit and loss account. Okay, quite simple. Now let's read the last part of this question. Certain long-term investment no longer considered for holding purpose to be reclassified as current investment. The original cost of this were rupees 18 lakhs but had been written down to 12 lakh to recognize permanent decline as per AS-13. So this is para 23, conversion of long-term investment, reclassifying long-term investment to short-term investment. Okay, let's see the answer. Quite simple, it is very easy. In the third case, the book value of the investment is 12 lakh, which is lower than its cost, that is rupees 18 lakh. Hence it would, here it should have been hence, not here. Hence the transfer should be at carrying amount, and hence the reclassified certain investments should be carried at rupees 12 lakh. Okay, I'll again explain you. Certain long-term investment no longer considered for holding purpose to be reclassified as current investment. The original cost. So we have to just see the cost and the carrying amount. The formula cost or carrying amount, whichever is lower as per para 23. So we have to see, this is the cost. We have got the cost, but have been written down to 12 lakh to recognize permanent decline. So this is the carrying amount. That means the book value. That is the book value. So whichever is lower is rupees 12 lakh. I hope you all have understood it well. Question number 49 is on the similar line. You can do it on your own. Okay, so our AS-13 accounting of investment is completed. So if you want anything to copy, please pause the video and copy from here. Okay. Now the next chapter we are going to start is investment accounting. Very simple chapter.